Okay, we're going live.
All right. This is exciting. Well, Dad, how you doing today?
I'm doing good. I'm
You have a nice
doing
day
good.
today?
Huh?
You have a nice day?
I had a pretty good day, all things considered. Just been been busy, folks. If you are, we got a couple minutes to our official start, but if you're on here, feel free to go to the comments section, which I think is below us,
Yep,
and
below us.
and say hi or ask some questions or tell us about your day. It's just great to hear from you. Um, it's first time we've done this, and we'll kick off here and officially here when my little thing there says it's about 4:30. So
Exciting. I'm excited. Are you excited for our first happy half hour, Dad?
I am very excited. It, this is going to be fun. This is going to be fun.
I've missed
Um,
everybody. I've missed all of our clients and being able to have events and seeing them in the office. And this doesn't make up for it, but it's nice to kind of get back out there.
it is nice to get back out there and such. So well, the little chimes are chiming here in the office, so I guess it's officially time to start. Welcome everybody. Welcome to the first happy half hour here with Carolina Retirement Planners. I'm David Shakavage. I am the founder and president of Carolina Retirement Planners, in case you came on and don't know us. And also with me is
Samantha Cabbage. I am this is my dad, and I am partners in the business and an advisor here at Carolina Retirement Planners.
so
So we are really excited to be doing this today.
so cheers, Sam. Cheers.
Here's to our first
What
happy half
what
hour.
what are you drinking there?
I am drinking a really nice rosé. I'm sitting out here on my porch enjoying the day. So I decided to opt for something cold and pink. What about you? What are you drinking?
Well, this is actually my custom blend of herbal tea. Honest. It is a mixture of hibiscus, rose hips, and peppermint. And it's actually I've had it. Those of you who come to the office know we're big on tea, and I actually have a tea shop in Manhattan called McNulty's, and I get them to blend this up for me by the pound.
Well,
So
that's
it's kind of
fair.
nice in the afternoon. You want some. Now, in case you're wondering why I'm not drinking something stronger, it's because we got a half hour to go and I got all kinds of gizmos to run. There is, however, a High West double rye Manhattan with my name on it, going to be formulated here in about an hour and a half down and outside of on a table at Tarantelli's downtown. So don't feel too bad for me because I will make up for it in the end. I will make up
Excellent.
for it in the end.
Oh, and we just want to say hi to Matt, Catherine, Martha, Katie. Welcome. We are excited. Also, I just so y'all know, we're sitting here talking, but Amy is monitoring our comments. So if you want to, say hi, tell us how you're feeling, ask us any questions, just drop them below in the comment box. And one of the things that I'm really interested in knowing from people is any hobbies. Have you developed any skills, any new hobbies? What have you been doing with yourself while you've been all cooped up at home? uh, for me personally, I have really developed my love of houseplants. I my houseplant collection has grown exponentially. They all have names. Where we have a really nice life together. So it's been pretty cool. Oh, and hi Lisa, thank you so much for joining us. Good to see y'all. But Dad, what about you? Do you have any hobbies that you've started?
You know, I read about these people that had to stay home with and all this time to do hobbies. I have been working so hard since this pandemic hit, both helping our clients and kind of revamping because, as most we have not seen people in the office since I don't know, the 11th of March or the 14th of March, somewhere in there. And if we're going to meet over Zoom, we got really good at Zoom meetings. I want to be sure that the sound and the light is right. So I got like 4 different lights. It took me 4 tries to find a lapel mic that works. Sometimes I have a little mic here that works just because of these things. I got
Ah,
fancy cameras, but
so your hobby has been learning all this technology. Your hobby has been acquiring all of these things to assist you in your virtual endeavor.
I got no defense. They're toys, but it's harder than you think,
Yeah.
but I'm
Oh,
having a
well,
good time, and when we're
so
meeting with people, it's been working really well.
Well, that's exciting. And I see, so we've gotten a few responses. Matt has taken up knife making, which is interesting. One of the shows that my husband makes me watch is Forged in Fire. So I am very used to watching bladesmithing now. It's actually very fascinating.
I
And
see
Katie,
Katie has taken up cocktail making.
oh yeah, that's we have also been making all kinds of cocktails at home. It's been really cool. Oh,
I've
and
just been
Jim,
drinking lots of wine.
yeah. We've had a nice time. It's interesting because now we're at the point where there's not any more shows to binge. Tiger King feels like lifetimes ago. I don't know if any of you watch Tiger Kings.
Well, the good news is Dharma and Greg has now come back. You can get that on Netflix or someplace, which has been my favorite show. I don't know if anybody out there has watched Dharma and Greg, but it was just my favorite feel-good show from way back when.
Oh, we got
And Lanny, I see you're doing walking, gardening, and listening to books on your phone, calling old friends. That's good to see. So um,
that is nice. I feel like I've been able to touch base with people that I've been too busy to really talk to as much as I would like. Um,
so
uh, I do see that Lisa, you've been reading books that your daughter gave you on decluttering. Is it the art of tidying up? Because I read it, but I never tidied up.
I
Every
read it too, and like I'm throwing away all the books, and so now the book is cluttering a shelf somewhere. I don't know. I guess some people, but boy, uh, I like clutter. If anybody's seen my desk at home, you'd understand. Even my desk now with nobody here to clean up for me. So
They say that that messiness is a sign of geniusness. So
well, I'll tell you, when I was in my first job, my desk was a total mess, and I get so much flack from it from some of the other engineers and executives. So I found a sign. The sign said, "If a messy desk if a cluttered desk is a sign of a cluttered mind, one cannot help wondering what is indicated by an empty desk." And they stopped giving me a hard time. They stopped giving me a hard time.
Well, we've had a few more comments come in. Joe thinks that you have become a Zoom expert, really, that it's all the time and energy you put in seems to be working. Tallulah says that you're telling your age with Dharma and Greg. It's been a few years.
Actually, I never watched it when it came on originally. I didn't watch much TV back then, but somehow we stumbled on it, and we actually bought, I think, pirated DVDs of the whole set of shows or something. Somebody in Canada recorded them and had
Oh yeah, I remember that.
commercials on them. Yeah, but now it's on officially on one of the networks. So, but
Well, one of the things that that we're excited that we're doing, that we're going to do here at the end today, is any of you who responded to our emails, giving us potential topics for the future, sending us questions for us to cover. We entered your name into my B chat. So all of y'all are in there, and at the end of this, we're gonna pick a name and we're gonna hand deliver you 2 bottles of wine. So we're excited about this. Today our topic seemed to be very obvious. It's what's on everyone's mind and what we should be covering. But in the future, when we keep doing this, we really want to be tuned into to what's important to you, to what you really want to know about. And so that's why we're asking you to get in touch with us in any way that you can and send us your questions, your potential topics, and things you'd like to see covered. And you could win some wine.
yeah, we want to. This should be fun. This is meant to be fun. but we probably should talk about something more official, shouldn't,
Oh,
eventually.
man, I suppose.
Okay. So let's talk, our topic today is where is the market going and what's our perspective and so forth. So I'm going to start, and I'm going to start by going over to the whiteboard here. You know me, I can't not talk, I can't not work on a whiteboard. So let me go over switch cameras here.
All right. While you're doing that, I want to say hi to Griselle. Oh, she was introduced to Summer in a Bottle Rosé Vino wine and loves it. I have not had that one. Mine is a Côte de Rhône Rosé. So it's Grenache Syrah Mourvedre, which is delicious. Ooh, and you did some Shutterfly books. I have not done that yet. My mom actually had a book made of everything that she ever posted on Facebook. All of her pictures from Facebook are now in this bound, beautiful book.
Yeah,
but I'm sorry,
interesting world we got.
I see you're all up and running.
So let's talk about start by just talking about what the market's done this year. Been such an interesting year. We started in January pretty high, and we went up to February 19th. And on February 19th, the stock market, the S&P 500 peaked. And then between February 19th and March 23rd, it fell by 34%. I mean, think about it. Inside just a little over a month, about a third of the wealth of the stock market just kind of evaporated. Should be a lesson to us. We've forgotten that can happen. I mean, we all remember 2008, but boy, it's been fading. We've had 11 great years, and everybody's thinking it'll never end. And boy, in fact, the drop, a 30% drop occurred in 22 days or something like that. It was the fastest drop in history, faster than 1929.
I remember logging on to Yahoo every day, Yahoo Finance, and going as I looked to see how the markets were going to open.
Yeah, it's just now the good news is between then and now, it's come back up to where it's almost where it was at the beginning of the year. And so we have had a recovery. Now, what's interesting is the investment folks have different names for these recoveries. What we saw was the market went down real sharply and it came back real sharply. And they called this a V-shaped recovery. And we all hope that this is what it is, that it's going to stay up and so forth. But it could do other things as well. And they've given names to this thing. There's a whole Wikipedia page on this where it could go down, come back up, but then we'll have another drop. And of course, they call that a W-shaped recovery. Now, what else could it do from this point here? Well, it could go down and take longer to come back up. That's called a U-shaped recovery. And it could also go down and take a really long time there to come back up. And we call that the bathtub, recovery.
Man.
The worst of all.
Fingers crossed for the V.
Yeah, we're all hoping for the V, but the worst of all is an L-shaped recovery where it goes down and it just kind of stays down for a long time. And this is pretty much what we've seen in Japan. And I think it was in 1990 or so, Japan, their stock market peaked, and it has not reached those levels in the last 30 years. So which kind of recovery are we going to have? To be honest, no one knows. Now, if you want to know, you could perhaps use a crystal ball. And as most of you know, I have a crystal ball on my desk. When people ask me what's going to happen, I say, you can borrow my crystal ball. It'll tell you. But boy, I'll tell you this. Myself and many other advisors, and you could read the papers, many other experts in investing and hedge fund managers and all the like, they're saying, boy, this doesn't make sense, that Wall Street and Main Street are so far apart. I mean, unemployment's at 13%. It used to be at 3 back here. You know, you see the airlines are down, hotels are down, events are canceled. It's hard to go shop. It seems like it shouldn't come back and be this high. I mean, yeah, the government's pumped a lot of money in, but it still seems like this is somewhat irrational. And a lot of people are scratching their head as to what this is going to do. Now, I look at it in terms of probabilities. So many variables. But if I said, if you were to bet that the market's going to be a lot higher at the end of this year or lower at the end of this year, the chances are probably better that it's going to be lower than it's going to be higher. This seems to be a little irrational, but this is the big question we face now. Now, there is more depth to this. In fact, Sam has spent some time digging deep into the numbers on this recovery and has pulled up some more interesting views. And when you look inside, it gets more interesting. So I'm going to turn it back to Sam here.
Excellent, excellent. And also, hi, Bob and Val, and hi, Casey. And Robert, I'm really interested in your driftwood sculptures. That is super cool.
Send us a picture. Maybe we'll show it next time.
Yeah, send us a picture. We want to see what y'all are making. But yeah, as Dad had mentioned, earlier this year, the market fell, and it fell quickly and dramatically. And miraculously, we are, it's gone up at a record pace as well. And we are almost back to where we started, depending on the day that you're looking at the market. But also, like he said, it's hard because we're looking and we have record unemployment numbers. Our COVID numbers seem to be on the rise rather than going down. We have protests nationwide, and there's many industries that haven't even been able to really reopen all of the way. So what we had to ask ourselves, is there more here than meets the eye? And the way that we did that was through numbers and data. So I'm gonna try to pull up my graph real quick. Let's see if this works. You see it, Dad?
I do.
All
see
right.
it.
So I created this graph for you, and most of the time when you talk about the market, you're thinking about the S&P 500 or the Dow or NASDAQ. But one of the ways that the financial industry looks at the economy is by breaking it down into what they call sectors. In fact, there are 11 different sectors that are in our economy. And that is what is plotted here, is the year-to-date return for each of these sectors. Now, when I started putting all of this in the graph, I realized that all of these 11 lines on here was really difficult for the eye to see. So I went ahead, and you guys, if you're our client, you know that we love spreadsheets, and I popped this into a spreadsheet. So over here, you have all of our sectors with their year-to-date returns. So we have some clear winners here. Up at the top, the technology sector is up. These are the year-to-date returns as of Tuesday. I don't know exactly what they are today, but the information technology is up almost 10%. These are things like Apple, Microsoft, Intel, Cisco, and also the consumer discretionary or consumer cyclical goods. They're up about 6%. And interestingly enough, about 30% of that, or a third of it, is made up of Amazon. The rest are things like Home Depot, Nike, Lowe's, Target, Starbucks. And then moving on, we have a few things that are just about even for the year. There are communication and our healthcare sectors. But beyond that, all of these sectors are still down. In fact, many of them are down significantly. Like our energy sector has taken the biggest hits, down still over 30%. The financial industry, which is going to be your banks predominantly, down about 20%. And then from there, we have the industrial, real estate, materials, utilities, consumer staple sectors are all still down. And then going back, you can kind of see this here on my graph. Down this purpley blue line down here, this is the energy, the banking, and then up here at the top, we can see the financial sector. But there's a few lessons that we could take from this. And the first is that, boy, this market recovery is being driven by a precious few things. You know, it's not surprising though, because even here at Carolina Retirement Planners, we've been buying all kinds of things. We've been buying cameras and microphones and lights. Y'all should see how many lights my dad has in his office right now. It's obscene. Also technology.
Only 4 big lights, you know.
It's crazy, y'all. You wouldn't even recognize it. But we've been doing that. We've been buying all of those things so we can adapt to this new virtual environment. And we're not the only ones. This is going on all across the country, across the world. Technology is currently booming. And I probably don't have to tell you about Amazon either, because I know that we personally are buying all kinds of stuff on Amazon that we normally would have gone to the store for. Now it's convenient and it feels safer. And it's likely that many of you might be buying things that way too. And, you know, the other piece is that this is kind of a double-edged sword when you look at it. You know, we have these few things that are kind of carrying the rest of the market. And if other sectors of this market start doing better, start recovering, then we could see that be. We could be, you know, could get that momentum back up. But conversely, it's a little, when all of your gains are in a handful of things, it also makes it a lot more fragile and a lot more weak. So what we wanted to do by this is just show you another look at what's going on and why there might be a disparity between the turmoil that we're seeing in the world currently and what we see in the market.
Casey had a question: is toilet paper part of consumer staples? Well, it either falls into discretionary or staples. I'm suspecting that toilet paper would be considered a staple rather than something you have the discretion as to whether you need or not. So let me also give a real quick analysis here. You know, as an engineer, I'm always looking for a number, a way to measure and say, are things okay? Are they overpriced? Are they going to fall? Wouldn't it be nice if we had a simple way to do that? Well, this gentleman here, Robert Schiller, has developed such a way. In fact, Schiller is, pardon?
I've never seen his picture before today. He's got some swagger.
He's got some swagger. He is a professor at Yale University, and he became famous back in 2000, because in 2000 he wrote a book called Irrational Exuberance. And what that book was saying is that, man, the market is just overpriced and it makes no sense. That was a dot-com bubble, remember? And the month it came out, the bubble burst and the market began to fall. And that was the first drop last decade in 2000. Then in 2005, he came out with the second edition. Now this is 2005, and he talked about with new material on the real estate bubble. No one was thinking about the real estate bubble in 2005. He had seen it ahead of time, published a whole book on it. And then by the time he came out with his third edition, he had won the Nobel Prize in economics. And what he won the Nobel Prize for was a thing called the CAPE ratio. And that stands for cyclically adjusted price to earnings. Now, it's now usually called the Schiller index, but here's kind of what it means. One way to tell if a stock is overpriced is to look at the relationship between its price and its earnings, how much it pays. You know, you buy a stock, you invest and buy a piece of a company because the company's going to make money and return some of that money to you in dividends or earnings. Now, if you paid $10 for the stock and it cost you $1, well, that had a P to E ratio of 10. If you paid $20 for a stock and it too only earned $1, that would be a P/E ratio of 20. And, you can see so far the 30. So the higher that number, the more overpriced things are. And you can do that PDE ratio, not just for a stock, but for the stock market as a whole to see what is it overvalued. The problem is it's noisy. Engineering term for noise means it bounces a lot and it's hard to get a prediction. What Schiller did is he took a 10-year average and he said, I'm going to take 10 years, adjust for inflation, and that's the number I'm going to use. And not only that, he went back and he got stock market data way back here. You can see this is like 1870. And it's all on his website. You can go to his website, and he ran this ratio for the last 150 years. Now, I want you to look at this line here. See, this is 25. Let's look at this line for 25. There have been 4 times in history where the ratio has gone above 25. This was the first one. That was 1929. You all, we've seen it in old movies and black and white photos of soup lines when the Great Depression hit. Second time it went above 25 is here. This was 2000. Most of us remember that was the dot-com bubble bursting. The third time was here in 2008. We remember that one most of all. And the fourth time is right now. It's been above 25 today, or as of yesterday, it was 29.2. This is a website that calculates it daily. It was 29.2. Now, this number in this approach at least gives us one indication that, boy, the market is high. And not only when it gets this high, historically, it's had a big drop, So this is another reason that I am worried. I've seen several comments that said, hey, what's the best mutual fund to buy? What should I do? I'll tell you, one thing is we can run a portfolio through Morningstar and tell you what would happen to that in 2008. I can't predict the future, but I'm pretty good at predicting the past because it's happened. And we have software that will go back and say, what would happen if this occurred again? How much would you lose? That's one way to know whether you're in trouble or not. But a little bit of a digression here on one way to tell if things are overpriced, a little bit of a lesson. So,
yeah. So Dad, what's the moral of all this? What is the point that you're trying to make everybody?
Well, there's some really good news in kind of what happened. Now, most of our clients, we have set up with strategies, and maybe we'll talk about them on a future, webinar or happy half hour, but we set up with strategies that have helped them, that we're expecting this and we're designed to help you ride it out. And I think a lot of them have told me when the market was down, we looked at it, they said, man, that's great. I didn't know I was doing so well. I feel really good, But if by chance you're on this webinar, you're not with us, or, if when that market fell, when a third of it went away, you were sick, you didn't want to open your statement, you were really worried. And well, the good news is it kind of came back. We don't know why. It seems irrational, but it's back up there. You now have a chance to do a do-over. So you could still secure it and make it whole. If any of our clients felt uncomfortable at that time, call me. We can look at that again. But we kind of build it in retirement. There's a saying, ROI. It normally stands for return on investment. Retirement, ROI stands for reliability of income. Retirement's another way to say I've been laid off for 35 years. So it's whole different strategies for investing, but this is an opportunity to do a do-over. I don't know if it'll go back up and we're great, or whether it'll come down soon, but I do know now you could do a do-over. So that's kind of the moral here of this whole thing.
Okay. Well, Dad, we do have a few questions that came in. Matt wants to know when you think that we might drop again.
You got to ask my crystal ball. I think one benchmark. It's like I think the market may still be irrationally exuberant. Everyone's saying, "Oh, I believe it's true," and the government's printed a lot of money and pumped it in. But usually, at the end of every quarter, results come out. In the first quarter, January, February, March, we fell at the second half of March, but most of the quarter was good. Now we got April, May, June. Come early July, when the second quarter numbers come, people may wake up and say, whoa. Another thing that could do it is if we feel, or the market feels, that the virus is coming back, or we're going to have to shut down again, or it's going to hurt us more. Well, you could see the emotions, the market going up, and oh, they found a vaccine. Oh, market's up. No, so the
market doesn't like uncertainty.
Market doesn't like, boy, we are just sitting there with so many uncertainties. So
Absolutely.
That's kind of my thought.
Yeah. And so I think I'm going to group Kathleen and Teresa's questions in together. What is the best, what's the best advice you can give right now for retirement and the stock market? And are there any specific investments that you feel like are safer than others?
It's hard for me, and I don't want to try to give based on a one sentence. Your own portfolio and your world, we need to sit and look at it and look at your plan. And if you don't need to have a plan, you need a plan. That's what gets you through this, knowing that you have different buckets of money and they're intended to weather the storms in different ways. They play different roles. So it's a little hard for us because we're almost at half an hour. It's hard for me to, maybe a future webinar, or, if you got a doubt, call us. We can look at it and see what happens, see what it looks like.
I would say it definitely just depends on people's specific risk tolerances and where they are in their life, where they are in their retirement, what assets they have, if they have a pension. I think that there's a lot of factors that play into what's appropriate to people.
Well, we should probably think about wrapping it, because I want to try to keep it to half an hour. I don't want to, we need to do our drawing. So
okay.
Let's do our, we could go on, believe me, I could do this all evening, but I got to try to make it the kind of thing where people say, well, half an hour, we'll get a chunk of learning, have some fun. It'll be a weekly ritual. Also, invite your friends next week. Invite your friends, tell them, hey, copy the invitation, send it out. Be great to have a crowd here that they can get some benefits. I also have something coming up. So a new website, a whole new approach that is in the works, and we'll talk about that in the future weeks too. Some really neat stuff.
Yeah. So, and I see that there are a few questions that we haven't gotten to, and we will get them into our queue of questions for people and make sure that we are able to address them in the future. But I agree, we don't want to keep you much longer than the half an hour.
Yeah.
And I have here the hat, and everyone from the past week who has sent us in questions or potential topics for the future, we have entered in here. So if you want to be able to win the raffle next week, go ahead and send us a question this week. So I've got all the names in here, and who is going to win 2 bottles of wine delivered to them? Pat and Reba. So congratulations, Pat and Reba.
Congratulations.
Y'all will have a wonderful time with these, and we will talk to you.
Get your email, your question in, or just a comment. Just if you don't have a question, just say, hey, give us some positive or maybe constructive feedback. What could we do to make it better? Want to make this as good as it can be. And everybody that does will be entered in. And we'll be back same time next week, 4:30 Thursday, for another happy half hour. Cheers, everybody.
Cheers, y'all.
Take care.